Us right now is Mr. Tambe. He is the CEO and MD of Biocon. Good afternoon, Mr. Tambe. Thank you very much for being with us on 18 Now. First up, of course, numbers in line with revenue, rising 10% year on year. The revenue growth was led by biosimilars and generic business, but research services revenue seems to have dipped 16% YOY. What led to this divergence?
I think the important thing to look at is that from a Biocon consolidated perspective, the biopharma business is about 83% of what we do, and the services business is about 17% of our total revenue contribution. The Syngene part of the business, which is services, has had a separate conversation in terms of what's led to its decline. A large part of it was driven by the dependence on one particular large biologics customer, and that didn't pan out the way it was expected. It was lower than what was projected in the past, and that led to the decline. They've had a separate conversation to see how that part of the business can also move forward and catch up with the second half, which will be stronger than the first half. But the big part of the story really is the biopharma side of the business, which is biosimilars and generics. And I think the big story is that biosimilars is growing very strong. We've had new launches. And then the generics part of the business has also seen a turnaround with return to profitability and also a growth that we've seen in the top line.
Right. So also the research services you mentioned are a specific large client impact in the segment. How soon this impact is likely to reverse?
So Syngene has had a conversation on that, and I think the commentary around that was that there will be a better second half than the first half, like I said before, but it will still be a year-on-year decline than before. That's the guidance they have provided when they had their earnings call. I think that still is, like I said before, a part of our business which is smaller than the bigger part of the business, which is the biopharma business, which is largely driven on the part of the biosimilar side at this point.
Right. So also, you've consistently talked about a stronger second half for this fiscal. What are the specific drivers that you expect to power that growth, and what gives you the confidence in that timeline?
See, one of the things that we've said, particularly on the biopharma side, is that when products launch, you will see that they ramp up, in a short while. It takes a certain time for them to mature. Now, we've seen success with Yesintek, which is our biosimilar to Stelara, and that's really taken off quite well. We've seen over 20% market share in the US. We've seen bevacizumab, which is an oncology product, which is again expected to drive market shares, add to our oncology franchise in the US, which is the second product that we launched. The third product where we have limited to no competition in the biosimilar space is insulin aspart, which is Kirsty. We're looking to get this contracting thing closed out as we enter the commercial space this year. So that is expected to then start for a full calendar year in the coming year. So that would mean towards the later part of this fiscal for us. We just announced Aflibercept, which is branded Yesafili, which is our brand for the ophthalmology space. And there again, we see a very unique opportunity that was launched this month. So you will see that we have a semi-exclusive position, if I can use that word, where there's only 2 biosimilars in the brand for a period of time towards hopefully end of the year. That gives us a large window to really capitalize on. That again is in the second half of the year, which is why we believe that the second half would be stronger and is going to be stronger than the first half of the fiscal year.
Right. Also, the interest costs have risen in the quarter gone by, with R&D costs inching higher. Gross margins expanded 150 bips on a year-on-year basis. What will the margin trajectory look like going forward?
So I I don't think the categorization is accurate. I think the research expenses have trended to be in the same place. In fact, if you look at it year on year, research has grown 14%. That's accurate. Sequentially, it's declined by 7 or 8%. And that's typically because of the nature of the business we are in. Because as products mature through development cycles, you will see that the rise and ebb of expenses, or I would say investments in R&D. On a full year basis, our guidance has been that we would be at around that 7% mark, and we still expect to be in that 7% range on R&D. On the margin profile guidance that you just referred to, we've always maintained that we will be in that mid-20s range, and we've consistently performed in that range, and we expect to do so as we go ahead as well.
All right, so now your biosimilar launches have been a key focus. Now, can you walk us through really how these products have performed in the quarter, and what do you see as the top growth drivers for the biosimilars business going ahead?
So I just articulated the 5 products that we expect to drive growth in the second half of this financial year. I think these are the new products that we believe will be very important to watch. They will also, from a Biocon Group perspective, be important as they drive growth overall from a consolidated basis. We've got legacy products which continue to, again, have durable margins. And that's another thing that I've said in the past, that unlike the generics business, the biosimilars business is very distinct, where mature established products continue to have a longer life in terms of how they deliver durable margins for a period of time. We've launched products almost 8 years ago with pegfilgrastim and trastuzumab, and both of them continue to deliver healthy margins even in fiscal 27.
All right, Mr. Tambe, thank you so much for joining us with the numbers and the growth roadmap ahead. Thank you. We will let you go on that note. It was a pleasure to have you on the show.